For more on the Microsoft Yahoo deal, we are joined by Todd Lowenstein. He is portfolio manager for the HighMark Value Momentum Fund. His fund owns about 530,000 shares of Microsoft, and he joins us from Los Angeles. Todd, let me first get your reaction to this deal. I mean, as a Microsoft shareholder, does this excite you?
Excite wouldn't be the word I would use. I'd say it looks like to be a good deal on the face of it in terms of bringing together the number 2 and number 3 player to put together a bona fide number 2 to go after the search business. It's still growing, we think, long term, and we think by bringing together best-of-breed capabilities and technology and platforms, they could be a real threat out there and be a viable number 2.
Is there more to come, though, from possible cooperations between Microsoft and Yahoo? I mean, is this maybe just a first stepping stone?
That's my assessment. I think this is a precursor to more involvement and more deals to come. This is kind of putting their toe in the water here and see how it works. And from this, they can build a foundation to work off of, to combine more activities that make sense.
Well, what do you think about Microsoft's prospects right now? I mean, obviously Vista was a big disappointment, but a lot of people got into the stock anyway for safety's sake. We're looking at the year-to-date chart here, a gain of 22%. Definitely not bad for this year. Is there some growth ahead when we look at the next release of Windows, considering the last one didn't really pick up a lot of momentum?
I would echo those sentiments, and I would agree. We're patient, contrarian, long-term investors and try to think about the business behind the stock. And we love situations where we can find undervalued stocks with low expectations. Microsoft fits this description. Investors put a disproportionate amount of attention on their break-even or money-losing businesses and not enough on the crown jewels, which is the Windows, the Office franchise, and the servers and tools business. These are good growth, high return businesses that warrant a higher multiple. And we think the catalyst of Windows 7 and the impending upgrade cycle that's likely to occur because of the ease and seamlessness of transition to Windows 7 is going to be a catalyst to unlock hidden value that we see in the shares.
What do you think about the shares? I mean, if you look at them over the past 5 years, They really even out at pretty much break even, although they beat the S&P by about 10 or 11%. Do you see some movement here? Because the stock, if you look at it like that, has been kind of a dog.
Yes, it depends how you look at it, of course. I think growth investors who were in the stock and disappointed by the growth rates, while they were still very good, didn't meet expectations. This company was kind of cursed by what you'd call the curse of high expectations. The multiples collapsed over the last 5 years, but earnings per share and returns have actually been very attractive. Investors got disillusioned because they've been reinvesting what are robust free cash flows. They do about $12 billion a year into these new ventures, adjacent businesses. And so it's been a source of distraction as well as potentially going after Yahoo. We think the core business is a beautiful business, wide moat, high return business. And once this catalyst of Windows 7 and better execution and cost saves, which they've delineated for investors, you're going to see margins accelerate and you're going to see multiple expansion. We think the stock's worth 30 to 35 if investors would wake up and see the value in this stock.
All right. Hey, Todd, thanks so much for spending some time with us. Todd Lowenstein there, fund manager at HighMark Capital Management. They hold, remember, 530,000 shares of Microsoft.